inspirational and motivational here at Clubhouse. Get a better mindset and set your goals here at Clubhouse. Educational things you need to know here at Clubhouse. Like credit, home, buying loans, and much more here at Clubhouse. The space for education, motivation, and inspiration. Clubhouse. The space for education, motivation, and inspiration. Clubhouse.
Hey, 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 hey. Hello, everybody. Welcome to the Home Buyers Clubhouse, where we go live every Wednesday and every Friday. On Wednesdays, we drop something inspirational and motivational, and on Fridays, we drop something educational. For those of you guys who don't know me, my name is Jessie Lynn. I am a Triangle Realtor with A to Z Realty. Ms. Erica Batts, honey, introduce yourself.
Hey, I am Erica Batts. I am your mortgage loan officer.
Yes, audience, drop your wins, but today Friday. Drop your wins anyway. Drop your wins. Yeah. Let us know how you're doing. This weather is great. But yeah, I'm excited. Today we are talking about credit. We've been on mortgage for a hot minute, and we always try to do different things, mortgage and savings and different things like that. So let's talk about credit. 10 ways of building credit. Erica, let's before we get started, is like credit a thing that you see that holds people back the most from getting a home, or is it other things?
Definitely credit is one of the major things. A lot of people don't really understand the role that credit plays in getting a mortgage. Just because you have a great job, if you don't have credit, then a lot of times you're still stopped. Like you may have savings, or you may be the type of person that pays for everything in cash. But people want before they loan you money, they want a history. They want a snapshot of what that looks like. Like, are you a person that pays your bills on time? And unfortunately, cash is not a way to establish that.
Exactly. And what a lot of people don't understand, that our credit is the number one. Is a number that lenders use to assess your credit worthiness. It's based on a variety of factors, and we're going to talk about those today, including your payment history, your credit utilization, a length of credit history. A good credit score can help you get approved. We kind of already know that, for loans and credit cards, and lower interest rates, which can save you a lot of money right now in this market.
Absolutely.
So let's talk about it. So 10 ways to build your credit score. Number one, we all know this. We talk about this all the time. And for some reason, we think that this is the only thing that builds our credit score, is paying your bills on time. Mm-hmm. That's a given. This one right here is the most important factor in your credit score. And we have people that come to us and they say they want to get a house. They're willing to do anything to get a house, and then they forget suddenly to pay on some credit cards. How have you? I mean, you got anything you want to add to that, girl?
I will say a lot of times, I know for a lot of us, there's more a month than there is money.
Mm-hmm.
So sometimes you have to know which bills that is okay to be late on and which aren't. Like, of course, we would all like to pay all of our bills on time, but in the event that you do have to make some choices about your budget, then, you may look at, okay, let me pay this credit card, but let me call and make payment arrangements for my car insurance. Let me make payment arrangements for my cable bill. Those are things that don't report on your credit on a monthly basis. A lot of those things, they only report when you don't pay them at all, and they have to go into collections. That's when those things report. So if that's something that, you find yourself having to make a choice on, pay that minimum payment on that credit card, and, make a payment arrangement on something else that does not report on your credit.
That's some great advice as well. I like that. Make payment arrangements on the ones that do not report monthly. I like that. And one thing that I've seen, a lot of people don't realize, just because you overpay on your credit card last month, it does not mean that you do not have to pay this month. credit cards are building cycles. They're building cycles. So if you pay it off before your cycle starts, right? Yeah, before your cycle, and then you start up another cycle and swipe it again, right at the end of your cycle, that number is going to be reported. So a lot of people don't realize that just because you pay extra last month does not mean you don't have to pay your credit card payment this month. And a lot of people don't understand that. I did not understand that when I first got a credit card.
Right.
So,
A credit card is not an installment loan. Now, is an installment loan you can do that with. So if I made 2 car payments this month, I can tell them to apply that towards this month and next month, which means I don't have a payment next month. But you can't do that with a credit card because it is a revolving debt.
right. So again, credit cards are in cycles. If your cycle ends on the 30th, you're starting over on the 1st, okay? Or the 31st, depends on the month, but it's starting over, okay? So make sure you pay your bill in cycles, during the cycle, in the cycle, whatever the cycle. I don't know how to say it right now.
You want
Anyway,
to make sure that you make a payment on it so that your payment is posted every billing cycle.
there you go. Okay. And keep your credit utilization rate low. And this is what we were just saying. Just because you're paying that bill on time, your credit utilization is the number 2 reason why your score is low. So, Erica, do you want to explain what a credit utilization is?
That's how much of your available credit are you spending. So if they give you a card with a $5,000 limit, but you charge $4,950, then that's not saying that you can use credit responsibly. So that's gonna, be a ding. So a lot of times, mostly what you hear is that number should be 30% of your balance is what you should try to keep it at. For mortgages, we would love to see it below 10%.
Yes.
But that's not possible for everybody. So 30% is good, 10% is great.
All right. So
10% of your credit limit.
Yes. So, let's use an example, right? So you're paying your bills on time. All you have right now is your credit card. You have your car payment, and then you have some other bill that's being reported, some other installment, right? Okay. So 1 month you decide that, you know what, I'm going to pay down this credit card. I'm going to pay as a $500 I have a $500 credit limit on this card. I'm at $499. I'm going to pay about $400 on this. I'm telling you, as you start paying your credit card bills and all that stuff, you're going to see your score rise, especially if you're paying your bills on time. And all of that is your credit utilization rate is what's killing you and what's killing your credit score. Okay.
A lot of times, so one of the examples that I used, when I used to be a credit counselor, when trying to explain credit to people was that if I come to you and say, hey, let me borrow $100, you're going to say, you can't borrow $100. I don't know you. But if I come to you and say, hey, can I borrow $10? I'm going to pay you back on Tuesday. And you say, okay, it's just $10. I'll let you borrow that. And I pay you back on Tuesday. Now, this happens several times. So now when I come to you and say, hey, can I borrow $100? I'm going to pay you back on Tuesday. You'd be like, oh, okay. I give you this $100 because you've paid me this $10 several months on time. So now I feel like, okay, I can trust you because you keep your word. You did what you said you were going to do. So now I'm more willing to lend you this $100.
Definitely. So the number 3 reason your score may be low, or the 3rd thing that affects your credit score is the length, your credit history, the length of your credit history. The longer your history, the better. Erica, you want to get some advice on this?
It's really just like what you said. The longer, the better. When you open a newer credit card, and that's a start. But the longer that you have that card, usually once you've had that card for a year or two, then that reflects positively. Now, one of the other things you can do is piggyback with someone who has had a card for a long period of time. So just like if you have, like for me, I added my niece onto a credit card that I had. Now, I've had that card for, let's say, 15 years. Now, even though she's 22, she now has the benefit of saying, okay, she's had this card for 15 years.
Yeah, but you don't want to piggyback off of nobody that's not paying their cards on time and they are maxing their cards out, because that's going to drive your score down But if you're piggybacking off of someone that has a low credit utilization rate and they're paying their bills on time, you're going to see your score go all the way up, right?
Right.
Especially
so
if that's
that's
the only
usually
credit
a
you
quick way
have.
to make it. Yeah, that's a quick way to they call it piggybacking, but that's a quick way to make that credit score jump.
Exactly. So, and some other advice that I want to give you guys about the length of your credit. A lot of people don't understand this. If you have a credit card and you're trying to build your score, do not close the account that you've had for the longest. Installments, all that. If you've had it for a long time and you just suddenly start closing stuff, you're going to see your score drop.
Right. And that's why a lot of times when people have a car that they pay off and they see that score drop 30, 40 points, and now they're discouraged because they're like, oh my gosh, what happened? I've been paying my bills on time, all of that. I paid this account off and now my score dropped. So that's generally why it has dropped, is because of the length of time that you've had the account.
Definitely. And another thing is you want to make sure that you are getting a variety of types of credit. Yeah, get a variety of types of credit. So having a variety types of credit, such as your credit cards, your loans, and installment accounts, that can help improve your score as well. So you don't want to have all credit cards on your credit. You want to have a mixture of credit. Right. And another thing is you definitely want to make sure you're not applying for a lot of credit at one time. Erica?
That works, because a lot of times, when you go to these stores and they say, hey, you can save 10% if you apply for this credit card, and you do that, part of your score is determined by how much credit you have available. And if I see that you've applied for all of these different credit cards, I don't know whether you got approved for these credit cards or not. I just see that there's been a lot of applications. So that creates a risk.
Right. So what about the car dealerships? I go there, they run my credit like 13 times. Will that hurt my score?
Unfortunately, that does hurt your score.
Okay.
A lot of times.
What about
now? Mortgages does not, because mortgages,
that was my next question,
expect you to run credit several times. So your mortgage is you can run multiple hits because there's a special code for a mortgage. So you can have multiple hits within a 30-day period, and it will only affect your credit the first time that you have it done. So if your score drops 3-4 points when you got it done the first time, then that will be the same as long as it's a mortgage credit pull.
So it's okay for me to shop around for different rates and different lenders, and Absolutely. It won't hurt my credit.
That is correct.
Is there a time limit on that or
usually within 30 days?
30 days. Awesome. So another thing is you want to check your credit report for errors. A lot of us, we don't do this. Your credit report is a record of your credit history, and it's important to check your credit report for errors at least once a year. If you find any errors, you need to dispute them with the credit bureau. Yes. And the way that you monitor, that's on my list later. So yeah, you need to check your credit score on a regular.
But check your credit report on a regular.
Yeah,
your score is going to be different, but you can always check your credit report on annualcreditreport.com. And they used to give you just the you got one free every year, but now since COVID has happened, they are offering a lot sooner, so you can get more of those, so you can monitor it really on a regular basis.
Okay. And another thing is you want to consider getting a secured credit card. If you have bad credit, you may want to consider getting a secured credit card. A secured credit card requires a deposit, which acts as collateral. This can help you build a credit history if you have no credit or bad credit.
Okay. And I will say there are several different cards out there. So you may have something with your local credit union. They may have credit builder products. I know I recommend Self a lot, which it used to be called Self Lender, where you pay a certain amount each month. And at the end of that, they'll give you most of your money back. It's almost like you're buying a CD over time. And that's usually really good to help build credit.
There you go. And number 8 is you want to make sure you are using credit monitoring services. You want to monitor your credit on a regular. This can help you track your credit score and report any changes to your credit report. So what I have here is reasons why you should monitor your credit and do sign up for these credit monitoring services. I'm gonna get it right, y'all. I'm gonna get it. So there are different things. Price. Some of them have different perks than the others. Some do credit monitoring, credit report monitoring. Some monitor your credit score, your identity theft protection, your dark web monitoring, credit alerts, and customer support. So there are some that's free out there. You have Credit Karma. You have Experian Identity Works that you could use. Identity Force, you got to pay for that one. So as well as the last one, you have LifeLock. You have to pay for that one as well. And Identity IQ, I do have a link for that, so you guys can get some kind of free trial or something. If y'all want it, just let me know. You got anything you want to add to that, Erica?
No, but I will say that, I know a lot of people like to use Credit Karma for, to see what their score is, all of that. Now that one is the Vantage score that they give you is traditionally not what lenders are going to be using in order to figure out, what your credit score is. But Credit Karma is actually really good for monitoring your credit, because anytime there's a change that happens, they're on it. They will report it. So that's I know for me, I had a utility bill at an old address that had come through, and because it wasn't forwarded, I didn't know about it. But as soon as it popped up on my credit to say that, hey, this has been reported to collections, I was calling people like, wait a minute, hold on. And they, and they were like, oh yeah, well, we had sent you a bill and it came back and, blah, 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 all of this. But that allowed me to be able to go ahead and take care of that.
Definitely. When I was heavy on building my credit and, doing the right things, keeping my credit cards low and stuff like that. Same thing. I'm at work. I got an alert from Credit Karma and I did that. And we tell people, we said, write dispute letters. You guys, I was at work and I got a piece of white paper and I just wrote my letter on the white paper, made a copy of it and mailed it in. That's it.
And sometimes you don't even have to dispute them. Just like for the one that I had, I didn't have to dispute it, because as soon as I called them, they were like, oh, well, if you can go ahead and take care of this, blah, 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 whatever. And then the next month it was off. So I didn't have to write a letter or dispute it or anything. I just, called my original creditor and took care of that.
Right. So you paid it, right? You owe that, right?
It was a valid debt. Absolutely. It was a valid
debt. Oh, definitely.
But I just didn't, I had never got the bill on it. So, and then sometimes that happens like with doctor bills as well, because they are good for that. Like they're not telling you that, you didn't pay all of your copay, you were $10 short or whatever, and it just pops up on your credit.
And look, y'all, I'm not in no kind of way telling you to dispute valid debt. I'm not telling you that. Okay. Pay it if you owe it. Number 9 is you want to make sure you be patient. It takes time to build good credit. It does. Don't get discouraged if your credit score doesn't improve right away. Just keep using your credit responsibly and your score will go up. That's number 1, because a lot of us, we go out, we pay for these credit repair companies, or we're trying to do it ourselves. We're thinking we're doing something wrong. We're not doing it right, but it's going to take some time. And I always say, give yourself at least 6 months. That's my goal. Give yourself 6 months. 3 months, you're going to see some changes, but just give yourself 6 months to see what you're trying to do to get your score. Go on.
I was going to say, sometimes these credit repair companies, they basically just taking your money. Because I talked to a person yesterday who had been paying a credit repair company for like 6 months. And my first, when we dove into what was on her credit, the first thing I told her was stop paying them. You paying them $100 a month to try to fix your credit, when really, had you taken that $100 a month, you could have done X, Y, Z, and you could have done that yourself, what you were looking for. So a lot of times they're only disputing. And when you're talking to these credit repair companies, ask questions, figure out, okay, how are they doing what they're doing? Is it that they're just writing dispute letters? Are they contacting somebody? Like, what is happening? What's their process to fix this?
And you're right, because I know back in the day, when I was looking at reports and trying to help people, a lot of the times it was their utilization. Period. Right. Like your credit you don't even really have bad credit. You don't.
Or either
Or
medical bills. That's another thing. A lot of people will get some medical bills and collections and think, oh my God, I need to clean up my credit. A lot of times that's not what's affecting your credit. It's the fact that you don't have any credit cards or you only have this car loan or whatever. So
yeah, yep,
talking to a professional or talking to your realtor, talking to your mortgage lender, that's what we help with.
definitely. What the duplicate student loans? I've seen those. It's small stuff, y'all. Y'all really need to stop giving your money away. And that's the last thing that I have is just make sure you get help. If you're struggling to build good credit, there are resources available for you, free resources available for you. You can talk to a credit counselor, a financial advisor. They can help you. We have a book called the Home and Credit Recipe Journal that you could use. We have it's dispute letters in there. It teaches you about credit. It teaches you about the home buying process, all the addresses that you need, all the phone numbers that you need to contact who, where, and when. So yeah, it's a lot of resources out there for you to build your credit and to fix your credit. Again, I always tell this story, and I know I don't usually share a lot of this stuff on the lives. I do this and whenever we have our events. But yeah, I have had bad credit. I've had a repo. I've had a foreclosure. I've had it all. You name it, I've had it. Bankruptcy, I've had it. I've done it. Been there, done all of that. Why? Because I did not know how to fix my credit. The repo was because the stupid guy told me that all I got to do is call them and tell them to pick up the car at the car dealership when I was buying another car. I did not know any better. It's not going to be a repo. It's just be a voluntary repo. Exactly. It's not going to hurt your credit. That was number one. Number two was the bankruptcy. I didn't know how to fix my credit. I saw the commercial on TV. Like, yo, want to start over? Commercial. Right. And my credit wasn't even that bad. I'm telling you, it wasn't even that bad. But I wanted to buy a house. I said, you know what? I can wait 2 years. I just do it that way. Saw the commercial. But I'm telling you guys, y'all don't have to go that far. You don't have to be that extreme. If you know about your credit, that's number one, knowing what credit is and what affects your credit. You can easily build and fix your credit, build and repair your credit, whatever you want to call it. Because a lot of the times, your credit is not really that bad. I've seen it. It's not that. I have seen some bad credit, but I'm telling you, a lot of the times it's not that bad.
Well, now I was gonna say yes. I have definitely seen the people where they ain't never paid nobody on time. Like now, those it's a little tougher to fix those. But if you just had a few hiccups here and there, then that's a conversation that we need to have. We can come up with an action plan. And just like I talked to somebody yesterday and gave them an action plan and said, "Hey, this is what we're gonna do." And it was like, "Oh, okay. Well, that's all we gotta do. That's it."
Yeah. And I have stories in this book about people, they came to me, they didn't know. I mean, they used their credit union, free resources. 6 months later, boom, they're in a house. They're getting a house. So many stories of people with bad credit, and it's not bad, or it is bad, but they fixed it. But I can talk to some people today that's not really motivated, and you tell them, don't buy a car, don't do this, don't do that. If you're trying to do it, then they apply for the house. They don't get approved for the house. And then next thing you know, they buy a car.
And I would say sometimes we do run into people that need a credit repair company. And if that's where you are, that is okay too. So there are several avenues to get you where you need to be. But credit repair companies are not the only way. I said, with us, with all the steps that we just talked about, really, for a lot of people, that's enough.
Right. Y'all learn the 4 C's of credit. Step 1.
And where can they get this 4 C's of credit?
Yes. So you can go to your hcrjournal.com, hcrjournal.com. I have a banner somewhere up here. Boom. Let me add it to the ticker. You can go there. We have our book on there. We also have a free credit repair checklist. We have a free mortgage checklist. We have a free checklist on there. So yeah, and I give a lot. It's a lot of stuff for free that's kind of given away. So just go
And
on
that's a lot
there.
of stuff. And how much is the book?
The book is like $25, I believe. Yes, $25.
And I will tell you, for most people, a credit repair company is $100 a month. And so you can invest $25 in yourself and, get this book, take you a couple of weekends, and you are on your way.
Amen. 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 I'm telling you, it's a lot of stuff in there, y'all. So yeah, don't sleep on it. But either way, y'all know where to find us if y'all need us. For those of y'all who don't know me, my name is Jess Lynn. I'm a Triangle Realty with A to Z Realty. You can reach me at 919-818-9854. Miss Erica.
Hey, and I'm Erica Batts. I'm your mortgage loan officer. You can reach me at 919-608-7916, or you can reach me at ericabatts.com.
You guys, y'all can reach all of us in the clubhouse at www.thehomebuyerclubhouse.com. Again, that is www.thehomebuyerclubhouse.com. You can find us on Facebook in our group and on our page at Home Buyers Clubhouse. You can find us on YouTube at The Home Buyers Clubhouse. We hope you guys have an awesome day. We hope you have a great freaking weekend, and we'll talk to you guys later. Bye-bye.
Bye.